The ECB talks about consolidation in the banking sector. We hear it from politicians as well. They talk about the need for cross-border consolidation in Europe. Yet people that sit in your chair, you and your colleagues at other banks around Europe, don't seem quite so interested. Why?
Well, look, I think ECB is right when they say that there is a need to continue to restructure the banking sector in Europe. There is a need for it after the crisis. It is not yet over in various countries. At the same time, merger, consolidation, cross-border merger, not easy, you know. You need a business case. And business case is difficult in the current environment. Flat interest rate curve, capital requirements. Business is not so easy. So it is risky. People have to make a clear assessment of the situation before making a decision. This is what we have seen in the recent case of Deutsche Bank and Commerzbank. So it takes time. And once more, you need a business case to do it.
OK, so if the German government picked up the phone and called you and said, would you be interested in Commerzbank? The answer would be, presumably, no.
The answer would be no.
Is there any bank around Europe that you could see any advantage with consolidating with?
Well, I say no. At the same time, of course, we are consolidating market shares, which is a different notion. You have the consolidation of entities, banks, but BNP Paribas grows in Germany. We have good clients, and we are very happy growing the business and the activities in Germany. That's the big difference. Market shares and entities. You can grow the market share, you know what you do, you can measure your risk, you can assess it, so you can lead the process. Acquisition is more difficult, more risky, more challenging in the current environment. So in that case, I would say no. We have shareholders, and I think they would say no.
In some ways, Mario Draghi and the rest of his colleagues at the ECB, when they talk about this need for consolidation, but what you're saying is they've created the environment for it not to happen. The flat curve effectively is precluding you from doing anything.
But the paradox is they know that the environment they have created is such that we should see more consolidation. We should see a reduction of costs, because the moment the interest rate curve is flat, we need to be very careful about the cost to reduce it. So we need restructuring, but it doesn't make it easy. It makes it more difficult. So that's why I've told you that maybe some banks may think about this. That's a different question. But the business case must be assessed case by case in a very careful way by the boards of the bank. And it's not easy to reach the conclusion that a merger can be done.
Can you see the winners around Europe already? When you look around Europe and you look at the banks that are generating growth, they're organically growing in key markets like you are in Germany right now, can you already see which ones are going to do well and which ones aren't? Which ones ultimately will be left standing?
The ones which are going to win are the ones which have good products for clients, serve well the clients, are very careful about regulation and comply with the various regulations, and are able to reduce costs. One way to address the cost question is to create platforms across the board serving the clients. And of course, the IT technology question is coming up front, maybe much more than before. Technology will be key for the future. Clients want it, and cost reduction needs technology. So the capacity to invest, the skills to invest, and how to do it, and how to make it efficient, will be the driver of success of tomorrow.
People talk a lot about negative rates and the impact that they are having on the European banking sector at the moment. They're holding the European banking sector back. They're destroying profitability. Are negative rates that bad?
Well, they are supporting the economy.
Right.
We need to be careful, because you have always two sides
this
to the
is the horse
coin.
before the cart, isn't it?
Yes.
Yeah.
Banks need a well-functioning economy, clients in good shape, operating well. Cost reduction has a lot to do with the capacity of funding of the companies. So monetary policy is designed by the central bank for the economy, not for the banks. But they are positive because simply they have supported growth. Of course, at the same time, they may have a negative impact, but that's the nature of monetary policy, to have an impact on the economy, and we have to live with this.
But the Bank de France suggested that maybe a tiering way forward would be the way forward.
Yeah, but this is a decision by the ECB. I can see that there is a discussion.
Yep.
We see what they do about it, but what is key is the decision and the predictability of the decisions made by the ECB about monetary policy. And once more, the banking industry has to adapt. The banking industry cannot drive monetary policy. That would be extremely wrong. So we have to take this into account and we have to adapt.
But nevertheless, are there ways of making it work better? People talk about tiering. They talk about the fact that that may allow the banking sector to operate a little bit more profitably, which may in turn encourage consolidation. It may encourage some of the behaviours that they want to see.
But this, once more, this is part of monetary policy.
Yep.
This is at the core of monetary policy, the vision they have about the way to implement monetary policy according to wage inflation and parameters they have about the growth in the economy. And I shall not comment too much at this point, because this is a given fact for us. We should be very careful in the banking industry not to influence monetary policy.
On that note, we are about to see a change at the ECB. What kind of characteristics do you think that the new president of the ECB should have?
Courage. Not easy to manage monetary policy, and you need courage. Capacity to team up, because there is a need to grow consensus among decision makers in Europe and within the ECB, and a clear understanding and capacity to provide guidance. What we need, the more, is to get clear guidance for the future, understand well the vision of monetary policy, and once more, it is based on courage, consensus, and capacity to understand the impact of what is being done.
Do you think the governor of the Bank of France exhibits those characteristics?
Governor of the Bank of France is a great governor.
Do you think he would make a great president?
That's not my decision. That's the decision of the heads of state in Europe.
But you think
François Villeroy-Gallo is a great governor.
Could he do? But you think he could do that job?
He has a great experience.
You must know him very well.
He has great experience.
Okay, we will leave that there. In terms of where the bank goes next, you talk about costs and you talk about the need to manage costs. Can you shrink the CIB to growth? Is it possible to shrink a commercial investment bank to growth? Because that is a question that I hear time and time again. Investment banking, commercial investment banking, a lot of banks are shrinking them at the moment. But can that ultimately generate the kind of growth you think people are looking for?
The way we see it is maybe, to try to answer your question, I need to explain the way we see it. We have a segment of clients, corporate sector, mid-sized companies, large companies. These companies need a lot of banking services, from cash management to advisory, M&A services. It's a broad range of skills all across the world in various currencies. What we need is to be able to offer this range of services, high quality, fitting their needs. So it's not only investment banking. Once more, we may have different definition, but it's about corporate banking, it's about investment banking. And when I look at the banks all across the world, the banks which are able to operate across the borders more globally, they offer this type of services. Some start more or have started more from corporate banking, shifting to investment banking, but I see more investment banking entities shifting to commercial banking. So today you see, I think, a change of business model. Serving the clients requires various skills. So it has a lot to do with the definition you give, but corporate banking, investment banking can reward bankers.
Yep. Can be profitable.
It's a good business.